Hey everyone. Today we're diving deep into the latest movement around BigBear.ai Inc. in BSBBAI, a stock that has recently taken a noticeable dip, sliding -352%. In this detailed breakdown, we're going to explore what's driving this decline, what the data is revealing, and what traders should keep in mind as they navigate this shifting market environment. In the world of fast-moving stocks, emotions are the enemy. Successful traders know that staying neutral and evaluating real-time behavior is the key to making smart decisions. One of the best ways to understand this mindset comes from Tim Bowen, a well-known lead trainer at Stocks to Trade. He often reminds traders that you should never force your expectations onto a chart. Instead, he says, let the stock show you what it wants to do. That simple principle can save traders from bad entries, premature exits, and the emotional roller coasters that come with impulsive decisions. And today, that same mindset applies perfectly to what we're seeing with BigBear.ai. Now, let's break down the company's newly released financial results. And this is where the story gets complicated. BigBear.ai reported quarterly revenue of $33.4 million, a figure that looks decent at first glance, but things take a downward turn when we look at profitability. The company is reporting a substantial operating loss of $21.86 million, largely driven by heavy operating expenses, uncertain financial planning, and a business model still trying to find its footing. These losses highlight the fragile state of the company's back-end operations, raising important concerns about long-term sustainability. To understand the severity of the situation, we have to look at the key metrics. Profit margins are not just weak, they're deeply negative. With a net profit margin sitting at 301.37%, the company is spending far more money than it's earning. Their EBIT margin is also heavily in the red at -281.3%, and the EBITDA margin follows the same troubling downward trend at -258.4%. These numbers signal major structural issues, and they show that the business is running at an extremely inefficient level. Revenue trends add another layer to the concern. BigBear.ai's annual revenue fell from $158.24 million, which is a significant decline, suggesting that demand for the company's products or services may not be growing at the pace investors hoped for. Combine shrinking revenue with soaring losses, and the financial picture looks more concerning than optimistic. The valuation side of the story doesn't offer much relief either. BigBear.ai currently has an enterprise value above $2.63 billion, but when we compare that against its negative cash flow and almost non-existent book value, the contrast becomes hard to ignore. These valuation mismatches make it difficult for investors to confidently predict strong future returns. Essentially, BigBear.ai is priced as though it's headed for major growth, but its current financials don't yet support that narrative. The market's reaction to all of this has been swift. As traders digested the earnings data, BBAI's intraday prices showed noticeable volatility, bouncing between highs and lows throughout the session. This kind of erratic movement usually reflects market uncertainty. Traders aren't sure whether the stock is a bargain or a ticking time bomb. Add in the disappointing financial report, and the selling pressure starts to make sense. Digging deeper into BigBear.ai's financial statements, we spot some interesting contradictions. The company's final cash balance rose to $542.03 million, which sounds positive until we notice that this came alongside negative operating cash flow and negative investing cash flow. So yes, they have more cash on hand, but the way they got there doesn't reflect strong business health. Capital expenditure numbers also highlight inefficiencies in how assets are being utilized. Meanwhile, shareholder equity sits at $610 million, and goodwill is reported at more than $48 million, numbers that say more about past acquisitions than about current performance strength. All of these conflicting figures paint a picture of a company at a crossroads. BigBear.ai is now facing a critical question. Can they adjust their strategy in time, or is the company heading toward deeper trouble? For investors, this is a moment that requires careful consideration. Transparency, restructuring, and a renewed commitment to operational efficiency could shift things in the right direction. But until those changes appear in the data, caution is understandable. Tim Bowen often emphasizes that every trade, whether a win or a loss, is a learning experience. His advice is simple: track your trades, track your reactions, analyze your mistakes, and grow from the process. That mindset applies perfectly here. BigBear.ai stock has been on a roller coaster, and observing how it moves, how it reacts to news, and how the market digests financial data can be a valuable lesson for any trader. At this moment, BigBear.ai's future will depend largely on how well the company can rebuild its financial foundation. Investors will be looking for signs of responsible spending, improved margins, consistent revenue growth, and clearer strategic execution. Without those pillars, the challenges ahead could intensify. Before we wrap up, remember that all of this is market commentary intended for informational purposes. This is not financial advice. Stocks to Trade News focuses on fast-moving sectors, analyzing the catalysts that push stocks up or down, everything from earnings results and FDA approvals to merger announcements and volume spikes. Our goal is to help active traders stay ahead of major market shifts. Stay sharp, stay analytical, and always let the data guide your decisions. This is not financial advice.